let's just say you're paying someone $2,000 a month. That's what you agreed to pay them, right? They're going to be on your salary. It could be you, right? So $2,000. Now there's going to be a tax on top of that. So even if that's what you pay that person, that's the employer side of taxes. The employer side includes, and I'm rounding, it includes Social Security tax from the employer side. It includes the Medicare tax from the employer side. It also includes unemployment. And depending on the state you're in, they will also charge some additional taxes. California has one for unemployment, for family leave, like depending on where you are, they're just like little numbers. So that's on top of what you've already promised to pay someone $2,000. So whenever you're looking to hire someone, really run the numbers, because it's not just what you're telling them you're going to pay on top. And then you have to, depending on the work they're doing and how they're working, there's also workers' comp, which is not a tax, it's more of an insurance, but it really gets treated like a tax. That's all on top. So now let's cover the employee side. So I tell you you're going to make $2,000. The reality is from there I had to take whatever you're going to contribute to your income tax. You're going to cover your side of Social Security, and you're going to cover your side of Medicare, and then whatever the state you're in. So at the end of the day, you might be making $1,700 after those taxes. So the employee might get $17,000. You officially are paying that employee $2,000, but the other $300 difference is going to taxes for the employee. And then on top of that, I'm just throwing a number. You pay an extra $350. So to have that person per month might cost you $2,350. I'm a strong believer in using companies that specialize in payroll, because they are up to date on all the local changes. I personally like Gusto, but QuickBooks has payroll. ADP is a big payroll. There's a bunch of different companies, and it's not extremely expensive. Some local accountants will do it too, so you can always work with someone local. To pay the payroll taxes, there's a couple things you need to know. You'll have to set up your account with the EFTPS, which is the IRS website where you pay payroll taxes. That takes a while, so make sure you don't leave it to the last minute, because it takes like a month to get like a PIN, and then you gotta get it notarized. It's a whole thing. EFTPS is the IRS. Then you'll want to set up an account with your state government. So they all, for the most part, tend to have a state unemployment or something. So you have two accounts, and what gets filed to the federal government, and it depends on what kind of filer and how much money you're going to owe. But overall, it's a 941. 941s get done on a quarterly basis. So I told you about estimated payments. That deadline of it's like, hey, whatever the quarter, the next 15 days, it follows kind of that timeline. So it's called a 941. The way it works is at the beginning, it says, okay, how much did you pay people? How much did you withhold in income tax for those people? This is how much you're going to pay for your employer side of Social Security, your employer side of Medicare. You do all that, you file it. There's some tax credits you can take. There's a bunch of stuff you can do that will help you lower how much you owe. You file that form and the payment together. So those two go together. You file it every quarter. Now at the end of the year, so in January, you file the fourth quarter, and then you file this form called the 940, which is only for unemployment. So you do it once a year. It's only for unemployment. It's about $42 per person, unless you have a state and then it offsets. But that $42, that 940 form, gets filed once a year and around January 15th, and that's to the federal government. Once you do those two, all those numbers kind of break down to independent persons on the W-2. That's what they get. And then the total number, so let's just say you have 10 employees, it's called a W-3. W-3 is the copy that the federal government gets. You get it as the employer, but the employees don't have it. It's kind of like, hey, this is a summary of all the W-2s you sent out. This is how much you withheld, this is how much you did all that. And then worth noting about, I told you about W-2, which you're familiar with, W-3, which is a summary. The W-4 is where you ask your employees how much taxes you're withholding. So it's, every time you start a new job, they tell you, hey, fill out this W-4, tell us how much tax we have to withhold. The IRS updated it this year. So it is a little bit more accurate, but a little bit more complicated to get to. So they have a calculator on their website that you enter information and they'll give you what to put in the form, but it's a little bit more complicated. My recommendation, talk to your accountant, talk to me if you need to, and make sure you get that right, because that's how we know if they're taking too much or too little. And because it's new, everyone's kind of getting the hang of it. So I've seen companies like royally mess it up.